ETF.com finance reporter Lucy Brewster, and I'm joined by our panel of experts. We have on the call 21 Shares co-founder and president Ophelia Snyder, Bitwise Investment Management Chief Investment Officer Matt Hougan, and Ophelia Snyder co-founded 21 Shares in 2018, which has launched dozens of exchange traded products in the cryptocurrency space. And last October, she and ARC's Kathy Woods joined together to apply with SEC for the first spot Bitcoin ETF. And Matt Hougan is the Chief Investment Officer at Bitwise Asset Management. He was previously the CEO of ETF.com, and therefore also launched today the Bitwise Bitcoin ETF with the ticker BITB. Thank you all so much for joining. And I'd love just to start off the panel. I'd love if the panelists could go one by one and just share very briefly how you first got into cryptocurrency. Ophelia, do you want to jump in?
I think this has been a very long and arduous road, right? It's been years and years of work from a really wide collection of people. And I think today is the culmination of all of that work. And obviously, we're really excited that Eric Kippy has gotten off to such a strong start and that we've, been able to deliver on this promise of bringing a product like this to the market that we, think is really a critical piece of access infrastructure for the industry.
Matt, do you want to hop in at all?
Sure. Yeah, I'd love to. Really excited to be here. Matt Hougan, CIO of Bitwise Asset Management. Like Ophelia, extremely excited on this historic day. We've brought to market the Bitwise Bitcoin ETF, BITB, which is the lowest cost ETF on the market today. I think it's a historic day for ETFs, a historic day for Bitcoin. You asked how I first got into Bitcoin initially. Because this is a ETF-centric call, the woman who first made me pay attention was Kathleen Moriarty, who was the lawyer for SPY and was the lawyer on the original Winklevoss ETF trust, which all of us are standing on those shoulders. They were the first people to file for a Bitcoin ETF more than 10 years ago. So, a shout out to Kathleen Moriarty, a wonderful individual. And then also to the Bitcoin world, we now have very low cost, easy to access tools to get into this incredible asset class that give people peace of mind. And it's a phenomenal day. We're excited to see the giant reception they've gotten.
Yeah, absolutely. I really appreciate you sharing that. And then, yeah, so I mean, for those of us who have been following this process towards SEC approval very closely, we know yesterday was a huge moment when all 11 spot Bitcoin ETF hopefuls were approved by the SEC. And I'd love to hear from all of you sort of zooming out. What's really the biggest difference between yesterday and today in terms of the future of cryptocurrency and Bitcoin? I know that your firms are really excited to launch these products, but if you could speak a little bit to the significance, maybe especially for our audience members who, may have not been tracking every single process of the applications. So yeah, Ophelia, I'd love to hear from you.
Yeah, so look, I think it's a complicated question because in several ways it's quite different, and in several ways this is just the beginning. I think there's been the key differences between today and yesterday are, first off, this removes a certain cloud of regulatory uncertainty around accessing this industry, accessing this asset class, and quite frankly, how to go about that access. There's now a very clear pathway for people to do that. They understand tax, they understand reporting. Given the audience here, we all know this, advisors have a pretty high burden in terms of trading execution, custody, reporting, tax, compliance, oversight. That was never going to really be possible to replicate in its entirety in new infrastructure to make a single investment into the crypto space. And so these products really do simplify that access in a really critical way to allow advisors and investors to participate in this space without the need for that infrastructure. My hope is that the biggest difference between yesterday and today is that a new cohort of people feel welcomed into this community. I think one of the things with crypto that has been challenging is it is quite infrastructurally complex to use. It's not the most straightforward thing. It makes people nervous. It's a bearer asset. You're dealing with all of that in real time when you're transacting in this asset class. And I think that's been a bit of a deterrent for people in terms of actually feeling welcomed and feeling like this was a space they could come into with confidence and ease, even if they are curious at a fundamental level about what crypto is and what digital assets are and what Bitcoin stands for. I think that's really where you're seeing the major shift, is that a group of people who, might have been curious about this asset can actually now start to enter it with confidence. And that's quite special and quite a large difference in terms of what this experience is like for advisors and investors in the US market.
I loved everything Ophelia said. I completely agree. We've been serving financial advisors for 7 years at Bitwise, and it has been hard for them to allocate to crypto. Now, we have thousands of clients who do in advisory practices, but they had to have levels of conviction that were 95% or higher. They had to be as convicted about crypto as Ophelia and I to jump through the hoops to do it. And one thing an ETF does is just make that a whole lot easier. I'd add 2 more pieces. One that's sort of 10,000 or 30,000 foot Bitcoin. If you think Bitcoin is on a journey from this incredible new idea that was highly unlikely and had almost no value to really mature into a accepted non-sovereign store of value, to mature into an apolitical currency rail, to mature into what we think Bitcoin could be, the ETF is a necessary journey, a necessary point on that journey. So having cleared that is a really important thing. Because this is an ETF-friendly audience, I'd point back to the gold ETF in 2004. I know we all think of gold as this institutional asset, but in 2003, it really wasn't. People who bought gold were gold bugs. They had tinfoil hats. They had dusty conferences at tired casinos. It was not the glittery institutional asset it is today. It was only a $2 trillion market. Today, it's a $15 trillion market. And you can walk into the Harvard Management Company and have a serious conversation about gold. Bitcoin is on a similar journey. And the ETF is a catalyst along that journey. It's taking its place as a mainstream asset. And there's going to be a before ETF era and an after ETF era. And the after ETF era is going to be bigger, broader, more inclusive, and in my view, just as exciting.
Yeah, absolutely. I appreciate you saying all of that. And then, we're only partially way through the first day of trading, but we're already seeing unprecedented trading volume in these spot Bitcoin ETFs that just launched. I'm curious, is this a validating moment for you both? There were a lot of projections about what this day would look like, and obviously we're still very early on, but how are you feeling?
I don't know about Ophelia. I feel so great. I feel a combination of relief and incredible excitement. Investors finally have a way to access these products. It's important to note how important this is. From yesterday to today, the available funds U.S. investors have to access this space, the cost of them fell 90%. That's more money in investors' pockets, which is net good. And it has been great to see the positive reception, but we were very confident in that. We talked to thousands of advisors every month, and we know that they wanted to be able to access the best performing asset class in the world over the last 1, 3, 5, and 10 years in a familiar low-cost wrapper. So we knew that demand was there. It's great to see hundreds of millions of dollars of trading volume in the top products. It's a wonderful day.
I agree with all that, but I would add, I think for me, the other piece that I definitely feel is this is just the beginning. This is the beginning of a process at the end of the day. We've been serving clients in the European market for the last 5 years, doing education, talking to people about crypto, talking to people about Bitcoin, talking to people about, how do blockchains work and why do blockchains exist? And this isn't magic internet money. This is actually, a new piece of financial infrastructure and a financial superhighway that's being built. And I think for the first time, it's going to be possible to have those discussions and have them really be actionable for advisors and for investors and actually have a product that they can actually acquire. And this is the beginning of a long-term partnership with all of these actors in terms of, continuing to trade these products, trading them effectively, infrastructure that works, making them available, making research available, and really bringing that client service. And so obviously, in our case, ARKB is a partnership between ARK Invest and 21 Shares. And so what we really look forward to is being able to engage with our communities of clients on these topics and actually help them as they navigate this process and begin to really offer advice to their people on how to enter this space.
Okay, yeah, no, I really appreciate all of that. And then, we just saw today, a number of wirehouse platforms, including Vanguard, do not have the ETFs on their platform. Vanguard has said they're not putting the crypto ETFs on yet. Are you at all concerned about that or surprised?
Not even a little bit. No. It took years of work in Europe to get every single platform. It's going to take time. There's a process.
Yeah.
There are obviously, and we all know this, like these intermediated platforms, there are gatekeepers, there are approval processes, there's diligence, there's discussions, there's going to be philosophical conversations. The anecdotal evidence I've seen from Vanguard seems to be, more on the philosophical end and more of a conversation around volatility than, potentially for some other platforms who may wait to see, more trading volume and conduct their diligence process. But this is sort of what I'm getting at, where this is the beginning of a long-term commitment to working in this space to ensure that these products are not only available in trading, which is really exciting and happened today, but also accessible to customers all across the value chain.
Yeah, I would just add, it makes the numbers today all the more impressive, given that we've only opened the door a crack. And I know our firm and Ophelia's firm and the other high quality firms are having conversations at the national accounts level to open those doors further to the best products. And most of them are going to happen. I imagine there will be a few philosophical holdouts that will stretch too long. But, it's worth noting Vanguard was a holdout on ETFs, finally came on board there. I suspect, look, if you think Bitcoin is going where I think it's going, eventually we will open all of these doors.
I agree with that. I think it's just a matter of time. It's just firms like Matt's and doing the work, and we've been showing up and doing that work for years. We're going to keep doing it, and this is part of it.
Yeah. Do you have a idea at all of that timeline? Within a year, do you think they'll be on the major wirehouses?
It's going to be a cascade. The major wirehouses are also a little bit of a herd animal. That's not entirely true. So once one goes, I think. But look, you're going to have major advisors on those platforms calling and clamoring for access. I already know that that's happening because I'm hearing from them. I'm sure Ophelia is hearing from them. And those are responsive businesses. So I would be surprised if there are many holdouts after a year, but you never know. I do know that we are going to all work on it and make progress. And many of those platforms are already open a crack now. So it's going to happen.
I agree. I think that's just a matter of time. And to give you an anecdote, when we started our business 5 years ago, conversations largely centered on, are you sure this is legal? And philosophy was the furthest thing from anyone's mind. It was more around, can you prove to me that this is not somehow an illegal thing? Like, well, it's definitely not illegal. Here's a bunch of stuff, but how are we having this conversation? And then those same people would come back and, within the span of a few months or a couple of years, be like asking really sophisticated questions on the relative merits of different blockchains and why certain features are more beneficial to certain use cases versus others. And I think that growth and sophistication, it comes through education. And I think that's going to be part of what we're going to see in the American market is a massive leap forward in terms of the level of knowledge and the level of sophistication on this asset class that advisors nationally have. And I think that's part of it. It's not just about the wirehouses, not just about those access points, but actually what does it take to make an advisor feel confident in discussing these things with their clients? That's going to end up being a major catalyst for this, both in terms of them pushing those wirehouses, but also in terms of them actually being able to advise their clients and allocate capital.
Yeah, absolutely. And then, we saw this approval yesterday, and along with SEC Chairman Gary Gensler voting to approve these ETFs, he also issued a pretty scathing public statement and, warning to investors, still making it clear that he is not at all endorsing Bitcoin or personally behind it at all. I'm curious to hear from you what you thought of him coming out so publicly skeptical, and if this really is a, moment of legitimizing Bitcoin, or if there's still a long way to go. Ophelia, I'd love to hear from you first.
I mean, I think this is a certain element of legitimization. I understand how complicated of a line I think that approval order was to walk, both politically and pragmatically. If you think about what's currently on the SEC's docket, not just associated with Bitcoin ETF, but other elements of crypto, I think, you could certainly see the very specific tightrope that they were trying to walk in the statements that were put out. And I think, sure, that makes sense. I think based on what their position is. I do think this is a legitimizing moment. It also removes some of the regulatory uncertainty around Bitcoin specifically, right? And I think there's often a misunderstanding around crypto assets that they're, a single block and they all work the same way. They don't, right? Some look more like currencies, some look more like commodities, some look more like finished products. And I think at least for Bitcoin, this is a very legitimizing moment and removes a lot of those questions. It makes it, quite frankly, a lot easier for people to make that decision to engage in the ecosystem. It makes it a lot less scary, and it destigmatizes some of these, I think, themes around crypto.
Yeah, Matt, do you want to join in at all there? What did you think of SEC Chairman Gary Gensler's statement?
Yeah, we read all the statements and they span the spectrum. You had Hester Peirce quoting Shakespeare, you had Carolyn Crenshaw making different arguments, and you had Gary Gensler doing another thing. In the end, what the SEC did was approve spot Bitcoin ETFs. And in the end, today investors can access Bitcoin at fees that are down 90% using institutional custodians with the protections of certain federal securities laws. And I think that will be the most important thing. Look, there are a lot of risks in crypto, particularly as you go down the spectrum to smaller crypto assets. There are a lot of risks that investors should think about, be worried about, etc. The beauty of Bitcoin ETFs is they give investors peace of mind by allowing them to access Bitcoin in a familiar, safe, and low-cost package. And so we were really focused on the approval and read those statements for what they were worth, which are signing statements, if you will, to run alongside the big news, which is after 10 plus years, we have spot Bitcoin ETFs.
There's a market dynamic where we have 11 of these funds on the market, and everyone's competing for market share. And Matt and Ophelia, you have two firms that are trading. How are you both thinking about differentiating yourselves from competitors? And what are the most important factors that investors are looking at right now in the early days of choosing which ETF they want to invest in?
So from the conversations we're having, it comes down to a couple of things. So we've been operating spot crypto exchange traded products for 5 years. So we actually have that operating experience directly in handling spot assets within this product structure for 5 years out of the European market. We're managing about $2.5 billion on that platform today. And so we're really bringing that operational expertise. It's coupled with 10 years of research coverage by ARC on crypto and 8 years of directly offering client services on crypto assets through the Resolute team. And it really is quite a unique proposition in terms of a combination of operational experience and expertise, research coverage, client service, as well as doing so at a reasonable price. It's going to be free. It is free for the first 6 months up to $1 billion and then 21 basis points thereafter.
Yeah, I love that you have Ophelia and I on, because I think there are many characteristics and the right characteristics that people should care about. People should look closely at fees because the less you pay, the more you keep. And we're at 20 basis points. Ophelia's at 21 basis points. Those are the two lowest fee ETFs on the market, 20, 30, 50, 80% cheaper than competitors. And that's a really big deal. The second thing I would say is crypto expertise. Ophelia mentioned that as well. Bitwise has been in the market for 7 years managing crypto funds for US investors, including financial advisors, family offices, and institutions. And that matters when you're dealing things with like cash creates and execution. And it also matters when you get questions from clients and you want reliable research coverage. So I would look at, crypto expertise. I would look at fees. I would look at the sort of strength and stability of the companies backing it. Then there are other add-ons. Bitwise is donating 10% of the profits of our ETF to the Bitcoin developer community. If you care deeply about Bitcoin, that's a big advantage. But for financial advisors, it's fees and support and crypto expertise that I think would be your defining factors. And you're lucky or smart to have two, in my view, of the best firms on the webinar today.
Absolutely. And I want to talk about fees for a moment because, your firms have, after the first waiver period, the lowest fees. And, Matt, when all the last filings came out with fees, you were throwing out the lowest number. So I'm curious, did you know what the range would be? Were you surprised at all? And could you speak a little bit to your strategy coming out with such low fees compared to some of your other competitors?
Yeah, look, this is a very simple product. At the end of the day, these ETFs take Bitcoin and hold it with a regulated third-party custodian. And that's relatively simple structure. And so you can do that at very low cost. I think there are two ways to approach fees. You can approach it as an asset manager, thinking about what you can make from a profit perspective, or you can approach it as an investor in terms of how much can you help the investor achieve their objective. And we knew that the way to help investors achieve their objective, we have a core value at Bitwise called what would the client want? What the client wants here is the lowest cost, highest quality ETF they can get in the market. Of course, there was a lot of game theory and thinking and early and late night phone calls at all the ETF issuers around this incredible competitive environment. And of course, we're really excited that BitB ended up as the lowest cost ETF. But it was really around that idea of how do we serve clients best? And that meant building the best quality product and then delivering at the lowest cost. It's pretty rare when you can get both of those things. We feel like you can do that in Bitcoin.
I agree with basically everything Matt's saying. From an investor perspective, I think he's right about the game theory behind this process, especially with the way this was run, which was essentially you had to fly blind because we're all working against very stringent and very similar deadlines. And by similar, I mean, I'm fairly certain we all got, a time and date where we had to produce certain documents. And so you didn't really get the benefit of, being able to see where the whole market priced. You were kind of doing so in a very, very much a game theory kind of way. I think for us, that was funny because, we ultimately ended up at 21 basis points, but, there's a 21 million maximum supply of Bitcoin. My company's name is 21 Shares. We already have a product priced at 21 basis points in the European market. So it was interesting because it's not super surprising that at the end of the day, that is where we ended up. I think from our perspective, this is not a product where we're looking to maximize profitability. That was not the point here. This is an access product. We don't want cost to be a reason that people feel like they can't participate in a financial revolution. That doesn't make much sense. We obviously offer this product as part of a suite. We have a range of actively managed ETFs in digital assets, that are obviously priced a little bit higher. They are more complex products, and they do package a lot of, ARC's active investment management chops and, our crypto background to help you actually manage your exposure to these to this asset class, both through, products that dynamically allocate between Bitcoin and cash, Bitcoin and Ethereum, and a true multi-asset strategy. And so from our perspective, this product in particular and the way we've approached pricing was really to provide an access product as efficiently as possible to the market in as cheap of wrappers we could.
Yeah, so are these funds currently profitable for either of you? And if not, will they eventually be, or what's the strategy there?
Well, I think at the levels that these ETFs are seated at, they're certainly not profitable. But the reason we're pricing it where we're pricing it is we think this is a very large addressable market measured in the tens of billions of dollars. And so this is a real business. Like Ophelia, also important to have a suite of other products behind it. But yeah, I mean, we are all building businesses here and trying to offer the best value for clients. And I think that's what these price points allow.
Couldn't have said it better myself.
Yeah, absolutely. Well, we just got this approval yesterday, but already people are interested in, what's the next thing? So do you see spot ether coming down the pipeline next? Is that sort of a logical next step or a whole nother, journey? How are you thinking about that? And do you have any plans you can share?
I mean, so we've obviously already filed for a spot Ethereum ETF in the US. We're the first people to do that in this cycle a couple of months ago. So obviously we're looking forward to having hopefully very similar kinds of engagements with regulators on the Ethereum product as we have with the Bitcoin product. Although clearly that's a little bit more novel. It hasn't gone through as many cycles of discussion. So I think, that would be the logical next step. But I do think, I think it's difficult at this stage to know exactly how that's going to play out.
Yeah, I would agree with that. And when you said what next, I actually thought on Bitcoin, because there's a lot to be excited about Bitcoin. What's next is those national account approvals. What's next is in April, there's a Bitcoin halving, which removes $7 billion in annual supply from the market. What's next in Bitcoin are potential interest rate cuts. There are a lot of catalysts in the Bitcoin ETF system above and beyond the sort of sustained long-term demand we expect to see out of this ETF. So I'm really excited, even just with the products that launched today. I think this is a multi-year story. Look, I agree with Ophelia. I think we'll eventually get to Ethereum ETFs. I do think they are more challenging, but today's launch clearly shows investors want ETF low-cost exposure to these incredible crypto assets. And so companies like Ophelia's and like mine are going to push to do that. So you'll see that, but there's a lot to be excited about just in Bitcoin.
Yeah, absolutely. And then in a broader sense, how do you think this changes Wall Street's attitude towards crypto?
Look, I think a lot of people wondered whether the ETF was priced in or not. I think there's a similar question on Wall Street's relationship to Bitcoin. I think people probably underestimate or overestimate the short-term impact of this on Wall Street and underestimate the long-term impact. It's not like if you hated Bitcoin yesterday, today you woke up chanting Satoshi Nakamoto. You can see that from the actions we're seeing at Vanguard. But I do think if you pan out over time, this normalizes Bitcoin in a very important way, and Wall Street firms will realize that there is economic opportunities in this space. And a few years from now, Bitcoin will feel what it should be, which is not nearly as divisive as it is. It's sort of ridiculous to see this divisiveness out there. I think it will be normalized, but the process will take months and quarters and years.
I can agree more with the timing element of this. Look, I think at the end of the day, it's going to do a couple of things. It's going to normalize over time Wall Street's relationship with Bitcoin at a minimum. That is going to take time. It's not going to happen overnight. There's often been this idea that somehow Wall Street and digital assets and blockchain are sort of diametrically opposed to each other. And yes, there will always be a cohort that, not your keys, not your coins, have to have self-custody or it doesn't count. That is a group of people, and that will continue to be a group of people. That is not the majority of humans. The majority of humans don't want to process their own wire transfers or have like a fixed connection. Why? Because that's just not, it's not their job. It's not what they're interested in. a lot of the value add from Wall Street comes in the form of advisory. Most people don't find their banks to be value additive purely on the basis of having processed wire transfer. So I think you will start to see that normalization. I think you're going to continue to see the adoption of blockchain technology in financial services because it is helpful from an efficiency gains perspective. And I don't expect that trend to change. I hope that the conversations that are now possible as a result of products like ARKB being in the market will allow us to further those conversations and make it an easier path. But I don't think it fundamentally, I think it's an accelerant to that trajectory, but I don't think it changes what we've been seeing in the market for the last couple of years, despite the fact that it's been a pretty brutal bear market in crypto, especially driven by some of those black swan events. Realize there have been some really nice gains this year, but the year prior, not so much. It's been fascinating to see, quite frankly, how the technology has flourished and how many more large financial firms you're seeing at least running things like POCs using the underlying technology. So I think the combination of products like this arriving on the advisor side, such that the real value add of Wall Street, that advisory piece, the part that's actually, what people pay for, can start to have these conversations alongside some of the discussions on the infrastructure side, I think is quite exciting.
Yeah, absolutely. And then I was wondering too, who you're seeing or who you think you'll see as your biggest customer base for your fund specifically, in terms of institutional versus retail.
So we've seen a very, very healthy mix. And I think that makes a lot of sense if you think about both sort of the ARK Invest and the 21 shares client base. We obviously there's quite a large retail brand at play here that also does quite a bit of business in the advisory space, as well as in the wires. So I think that's very much been the focus. I know, Kathy mentioned publicly a couple of days ago, obviously, also having really high level discussions with pensions, with treasuries, and with a very wide range of customers. So it's been really exciting to see the breadth of that demand. Even as simple as, we hosted an X space last night. And it was a combination of really extraordinary economists like Art Lafford, really deep crypto analysis from crypto native analysts, coupled with, at one point, Elon Musk joined us and started talking about, what is the role of Bitcoin in space travel, and what does that mean for energy usage and green technology. And so I think that's really representative of quite a wide range of interests, both in terms of professionals who operate in the space, as well as, quite frankly, I think 160,000 people tuned in at various points in time to watch that with us. So I think it's a much wider user base than people realize.
We all enjoyed hearing about Bitcoin on the moon. That was an incredible moment. But I can answer this question. I agree with Ophelia. The beautiful thing about the ETF wrapper is that an individual investor can use it, and a hedge fund can use it, and a pension fund can use it, and a financial advisor can use it. I wrote a tweet late last night about ETFs broadly and mentioned that I own the same ETF in my kids' 529 as Millennium Management, one of the most sophisticated hedge funds in the world. And that's pretty cool. We're seeing that in our ETFs as well. Our primary client at Bitwise is financial professionals. So financial advisors, RIAs, wirehouse brokers, family offices, and some institutions. That's the market we're set up to serve with our distribution team and our research team. But with the lowest cost ETF, I think you'll see a wide variety of people moving into these products. I know that some higher fee products are held extensively in self-directed retail retirement accounts. I know there's already some movement of those in the broader ecosystem today. So we expect a wide variety, but we've architected our firm to serve that advisor, family office, institutional marketplace.
Leading up to this approval, we saw a lot of interest in the biggest Bitcoin futures ETF as the, price of Bitcoin has gone up as people anticipated this. And I'm curious to hear from both of you what you think will happen with the biggest Bitcoin futures fund, the ProShares, BITO, and other futures funds. will there still be a role for them in investors' portfolios, or will they eventually see outflows? I mean, I know no one has a crystal ball, but what sort of are you thinking about that?
We don't have a crystal ball, but we have a historical record, which is you can look what happened in gold, and there were gold futures ETFs, and they slowly wound down over time. I think those futures-based products were an important bridge. They help people access Bitcoin before Bitcoin ETFs, and many people have done quite well with those. But what people want is spot. And I say that as someone who has a futures-based product. I think you'll see those products evolve and change over time. They'll still exist, and many people will use them, and they may be effective in certain situations. I'm not saying there's no role for it, but when you can provide spot-based exposure that removes the issues of contango and backwardation, that's what people want. People who want to buy Bitcoin, they just want to buy Bitcoin by and large. And so I think the market will migrate to spot products.
I agree. I think futures have a role, and we've seen futures funds exist along spot funds for commodities in the past. They do have a role. They are suited to a smaller audience than spot is. Spot is going to be a much larger market, just definitionally. It's a cleaner, simpler product. It doesn't have any other exposures baked into it. It doesn't have any other themes baked into it. It doesn't deal with, contango backwardation, whatever. It's a much cleaner structure. And I do think it will end up being far more appropriate for a larger audience. But that being said, I do think futures will continue to have a reason to exist and play a role in certain investors' portfolios if that's appropriate to whatever strategy they're running.
Yeah, absolutely. And then I just wanted to include, we also have some questions that were submitted from our audience. First one is, what kind of investors should invest in a Bitcoin ETF? And is it only for people with a high risk appetite?
Look, yes, these assets are volatile. I don't think that goes without saying. It certainly justifies itself from a risk reward profile and in terms of correlations and how it can improve the overall performance of your portfolio. So it certainly does have a role, even if what you're looking for is not a very high volatility product. However, we do understand this is not necessarily going to be the product or the way to access digital assets for every client. That's why we rolled out a broader suite, including these actively managed products. One of them, moves investors between Bitcoin and US dollars to help mitigate some of that volatility and provide that Bitcoin exposure without having a product that, can have a 70 vol to it. And so I think it's really going to depend. This is a very complex and quite critical asset class. And so digital assets are not going to be one size fits all in terms of how people approach this market.
Yeah. And I would just add that it's important to consider it within a portfolio context. Obviously, if you look at Bitcoin, if you had 100% of your portfolio invested in Bitcoin, you have lived through some very volatile periods. But most Bitwise clients have 1 to 5% of their portfolio invested in Bitcoin. They rebalance it regularly. And on a historical basis, it doesn't have a significant impact on a balanced portfolio at those levels. So it is important to remember that you don't need to just look at it in isolation. You should look at it in a portfolio context where it has these wonderful attributes of low average correlations, liquidity, etc. But for sure, it's not for everyone. And I think risk mitigated products are interesting, and we'll see more of those. But I would push back a little on it being super volatile. It is, of course, but in a portfolio context, at least historically, it could be an important factor.
In support of that, the ARC 21 shares research also supports allocations in that level as part of how you think about that broader portfolio construction. So I think that's if you're seeing it from the client base as well as, and I believe Bitwise has research that actually supports those levels explicitly as well. If you're seeing that kind of across the board from multiple sources using different methodologies to arrive at that conclusion, that's a pretty validated set.
Great points. And our next audience question is actually related to volatility too. Is there any discussion that increased volume of both retail and institutional investors could actually help stabilize the overall volatility of Bitcoin?
I'll jump in there. There's certainly been a lot of discussion about that. And abstractly, as you bring in new types of investors with different holding periods and different reasons for owning an asset, you should see a diminution of volatility. But I think I I guess I won't speak for Ophelia. She can speak for herself. I do not believe that Bitcoin is going to become boring over time. I think it's going to continue to be a volatile asset. You're still in an asset class that is early in its journey and that's going after a large addressable market with significant risks. So I wouldn't buy Bitcoin expecting a 15 vol going forward. Maybe volatility will come down a bit as the audience of Bitcoin sort of becomes more distributed and more different. But I don't think the volatility is going away anytime soon.
Depends on the time horizon you're talking about, right?
Absolutely. Yes. Great point.
25 years from now?
Oh, boring as dirt.
Boring as dirt. And I think that's the question, right? Like this is, you need to think about this in the context of a technology adoption curve. Bitcoin today roughly, actually digital assets in general today, roughly sit at where the internet was in the late 90s in terms of adoption, right? So think about like the number, how we access the internet today, which is, I'm pretty sure every single person listening to this has at least one, if not two internet connected devices within arm's reach at any point in time, versus where we were, 25 years ago. And I think that's the shift that we're looking at, right? So if you think about how ubiquitous something like the internet is today and how inconceivable it is to us to go about our daily lives without it, whether it is quite literally this webinar or ordering a pizza, a car, calling your mother, or, speaking to your doctor, that is now embedded in our infrastructure as humanity. And I think you can actually watch digital assets and crypto and blockchain follow that exact same adoption curve. So you got to realize where we are in this process. And that's part of it, right? There used to be this concept of, tech companies, and now most companies have some form of tech embedded in them, right? There are pure play tech companies, but, Tesla's a tech company, right? And so, okay, they also manufacture cars. Are they more similar to GE? Or are they more similar to that kind of discussion? I think is where this will ultimately go. And that requires a couple more decades of work. But so realize what stage of the adoption curve you're coming in at.
Another person asked, why would some issuers come in with much higher fees when they know that they're competing against really low cost funds? Is there a strategy there?
Not a good one.
Yeah, it's hard. I know.
I'm sure there is one. I don't know what that would be. I think there are some firms here that have, very, very large owned distribution channels. That's likely playing some role in this.
The reason it's such a struggle is that lower fee products are better for investors. And you look at the ETF landscape and people gravitate over time to lower fee products. So yeah, Ophelia and I ended up in the same zone, which is delivering investors what they want, which is low fee exposure. If we thought other strategies were great, we would have ended up there.
Another listener asked, do you think there will be any more issuers that come in with spot Bitcoin ETF products? And you spoke about this a little bit, Matt, but what do you think the next kind of iteration of these spot Bitcoin ETFs will be coming down the pipeline?
Oh, great question. We have a lot of spot products right now. I'm not sure we need any more. I don't know that it's that appetizing to launch a Me Too product with 11 or whatever competitors, particularly given the really aggressive pricing that you can get from firms like Bitwise and 21 shares. So you never know. People can do what they want, but I would be surprised. I do think the ETF innovation engine is an animal of its own right. And you will see people experimenting with multiple ideas. Whether those are risk mitigated strategies or eventually option strategies or other products. You look at the gold market. There are ETFs that just hold gold in Switzerland. People will try anything to carve out a market share. But most of the Bitcoin market is going to end up in the products that were launched today. That's my belief.
I don't think we're going to see more issuers enter the space. But also bluntly, I just don't know who else there would be. I don't see it unless someone's coming with like a very large owned asset platform. I think I agree with what Matt's saying. We're obviously already launching products that involve Bitcoin exposure in a variety of other other wrappers and other strategies beyond just pure, long spot exposure. So I think you will see a proliferation there, both within Bitcoin as well as, multi-asset.
And it's worth one thing to build on that. I do think many investors who are just encountering Bitcoin for the first time today, some of them will become Bitcoin maximalists and decide it's the only coin that matter. And some of them will move on to Ethereum and other assets. So I do think this is a catalyst for broader crypto exposure in funds, even if they're not available in ETF structures. They may be available in private funds, they may be available in SMAs, they may be available in other structures. And I think you'll see growth in those as a consequence of today as well.
Way down the pipeline, someone was interested in, are we going to see spot ETFs for other cryptocurrencies? We talked about Ether.
In order to have products for others, you would really have to have some more comprehensive crypto regulation in America.
Mm-hmm.
Complicated process to do these decisions as a one-off. And that is the way this is currently set up. So if you read these decisions, Bitcoin was set up as a one-off. I expect if and when Ethereum happens, it will also be set up as a one-off, whether that's in this cycle of applications or a later cycle. I just don't see that being the catalyst for that more comprehensive regulations. I think the US has tried a couple of times with different pieces of legislation. Hasn't quite gotten much traction yet. I think that's what's going to be required to get much further down that list. Although obviously, 21 Shares runs 40 plus funds outside of the US, covering everything from Solana to, Arbitrum products. So we go pretty deep into that, into what's called, the alts, which is the other cryptocurrencies that are not Bitcoin or Ethereum. And so we obviously do offer that in other jurisdictions, and we actually see very healthy, very healthy demand for those products outside of the US. But I think part of that is predicated on the fact that, Europe has MiCA and Switzerland has very strong, very clear crypto regulations. It makes this much easier. I think until the US has cleaned up some of that, it's going to be difficult to go beyond, a few top assets within this structure.
I agree with that. It's worth noting those products in Europe work just fine, which is which is an important note. I think this is another question where it's a matter of time, though. So I completely agree with Ophelia that there's a yawning chasm between Ethereum and any other asset in the US. But I'm an optimist. Over time, we're going to get there. Again, there's a before ETF era and an after ETF era. We're in the after ETF era. And the other thing I would add is Bitcoin and Ethereum are a huge portion of crypto's overall market cap. So it's always good to think about what's beyond the horizon. It's also very exciting to be thankful for what we have today, which we haven't had before, which is an ETF covering more than half of the crypto asset market at extremely low fees.
Yeah, those are really great points. Thank you for sharing them. Well, I really just want to emphasize how much I appreciate everyone who joined in and our panelists joining in. Thanks again, Ophelia and Matt, for joining. It was so great to hear from you both.
Thank you.
Thanks, everyone.